Hi everybody, this is Seth Melamed, Head of Business Development here at Quoine. I am joined here in Tokyo this evening by Steve Swain, who is the CEO of Lendingblock. Welcome, Stephen.
Seth, it's a great pleasure to be here. It's a pleasure to be in Tokyo.
Great. So tonight we're going to be speaking about the Lendingblock service and really the development and expansion of blockchain-based financial services, and specifically how Lendingblock is starting to enter into the space. So my first question is, I want to ask you about how does Lendingblock service fit into the bigger picture of disruption of traditional financial services using the blockchain?
So thanks for the question, Seth. What we're looking to do is to create for the crypto economy, for digital financial services, an equivalent to the securities lending market, which is a hugely important part of conventional financial services. What it does and what we're aiming to replicate is it allows borrowers and lenders, institutional borrowers and lenders, to make large-scale loans between them on a collateralized basis. So we think the same things that drive the needs to borrow and lend in conventional stock markets equally exist for digital assets. And what we're doing is purely focused on that institutional market. So we're not focused at all on the retail market, as I would say 98% of other lending businesses are.
I see. Okay. So on that same theme, there are quite a number of lending services available today. I've become intimately aware of some of them. Not all of them have great security. I've looked deeply into your model, and I think it's a really good one. But I would like you to articulate for everyone, what is the difference of the Lendingblock lending model versus some of the other services that are out there?
Yeah, so as I said, I think difference number one is that we're purely focused on institutional, so we don't deal with the retail customer base at all. What that means for us is that we need to understand and to meet the needs of the institutional clients. And like you, I come from a conventional capital markets background, so we've got a team which is very focused on sort of understanding some of the security, some of the regulatory needs and expectations that our clients have, making sure that we build a platform that meets those needs. We don't see some of the retail lenders as being competitors at all.
Okay.
If you take sort of somebody, and there are the numerous who could fit into this category, people who, for example, will lend retail consumers dollars but take in Bitcoin or ETH as collateral, for example. What those lenders can and will be doing with us is to say, let's aggregate all of that collateral into a pool and then put it out onto the wholesale borrowing market and be able to generate income that they can then share with their own customers. So think of them as being sort of aggregators of retail level supply up to the scale of institutional financial participants.
Got you. And is there another angle here in terms of what institutional clients need in terms of security versus your typical retail-oriented platform?
Well, I think institutions, for one thing, they are putting other people's money at risk largely. So if you are a fund managing other people's money, they have fiduciary requirements. In many cases, those are kind of explicitly spelt out from a regulatory point of view. So they need to make sure that there's absolute confidence that those assets are not going to be lost. So people's retirement money, for example, needs to be treated properly. And what we do is to make sure that we've put the controls and transparency in place to show what we do meets those standards. But also we then think about, well, how do we make sure if we're putting things into cold storage or using other suppliers that everything that they do meets those same standards.
Okay.
Yeah. So how do you see, Seth, that Lendingblock and Liquid could work together? So what's the plan for our partnership?
So I think as we've talked about it with yourself and Linda over the past few months, I think there's a number of vectors where we're going to be working together. So first of all, for the existing Liquid user base, it's another channel where people can derive yield from their crypto holdings, right? I think just like in a trade environment where you're looking to buy and sell items, being able to have a greater pool of borrowers for a lender that they can lend out to is a good thing. And we've looked into Lendingblock and convinced that your model in terms of security and custody and collateralization is really a robust one that we are a fiduciary of our Liquid clients as well. I think on the other side, we're going to be providing great liquidity to Lendingblock in terms of when you have liquidation scenarios where you need to close out a position that may have reached its margin requirements. And on the last side, I think for our margin traders, being connected to Lendingblock gives them another relatively, more liquidity, which could lead to lower costs for doing margin trading on our platform. And that's a big part of what we do at Liquid. So I'm incredibly excited for this partnership to get launched.
That's great. And what about sort of lending and borrowing off your own balance sheet, for example?
And that's a whole nother avenue that I think we'll be exploring because, as an exchange, we do have a number of, a big balance sheet of crypto holdings that we will probably look to monetize by using Lendingblock as well. And, there's OTC trades where we'll need to provide inventory in a short period of time in order to take on the OTC trade. And so we look at Lendingblock as a great source of liquidity for that as well.
Mm-hmm. So I've spoken a little bit about sort of lending and what we do. How do you see the role of exchanges in crypto going forward?
So I draw my sort of vision here from what we see in today's world of the traditional analog stock exchanges or commodity exchanges. We have in the world today, I don't know, maybe a couple hundred different cryptocurrency exchanges in the world. And every time I go to a conference, someone is starting a new one. And the reality is that's probably not how things are going to look down the road. Mm-hmm. But exchanges there's still an important part of having an exchange, whether it's a centralized exchange, decentralized. It's basically that all-important price discovery mechanism that you really can't have without an exchange. And we, as adoption of crypto increases and it's becoming more and more used in the mainstream where merchants are taking in crypto to pay for goods and services, or in Japan for a bowl of ramen, you're still going to need someone at the back end to be able to do that exchange quickly, efficiently, and securely. And so we think that our role as a cryptocurrency exchange will grow just as the way the adoption of crypto grows in society.
Mm-hmm. So I was at an event recently, I think it was Consensus in Singapore, and there were businesses who basically would enable you the claim was to start your own cryptocurrency exchange in 6 weeks.
Yeah.
Yeah. What's your view on that? Is it a little bit more complicated than that, or is this a reality that anybody can launch a crypto exchange?
It's a good question. Sort of like, yeah, if it was that easy, there would be a lot more good exchanges out there. The reality is it's really hard. We have 320 people working at Quoine around the world now, and I think it's probably 5 or 6 different offices. We have so many people, I lose track. It's really hard. The technology is still an emerging technology, and just having people in their garage, it's a really romantic story. But the reality is, we're custodians, and that means that we are responsible for people's funds. We have regulatory requirements, legal, audit. It's not just a matching engine. That's sort of the starting point. It's certainly not the ending point. So, listen, I think the exchanges need to get better. The fact that so many people want to start one means that people aren't necessarily happy with the existing infrastructure, but that's our opportunity as well to grow and get better. But I'm not too worried about the hundreds of different people trying to start an exchange. It's just not that easy.
Yeah, somebody asked me recently, I think I made the comment that there were too many exchanges.
Yeah.
And somebody said, well, how many do you think there should be or will be? So my view was that we won't get down to 5 or 6, mm-hmm. but certainly there's no kind of real role or necessity for hundreds of exchanges.
True.
It will some consolidation will happen.
Sure.
Some of them will wither and die, but the ones that will survive will be sort of differentiated along, perhaps along sort of regional lines, or perhaps along a specialization on a certain type of asset or a certain type of user. What's your view on sort of the exchange landscape in 24 months?
Yeah, I think what we will see is definitely a consolidation, and I think each region might have 2 to 3 different exchanges mm-hmm. in those regions. And I think, it'll take shape to look something like what the fiat exchanges of today resemble. So in the United States, you have, 2 main stock exchanges. You have, a couple different commodity exchanges and some futures exchanges. But, it's probably, you can count all the major exchanges on two hands. Versus if you look at the number of crypto exchanges that pop up overnight, it's sort of the wild, wild west. So I think there'll be consolidation and rationalization, and hopefully that'll be a good thing for consumers at the same time. So I wanted to talk about, changing gears a little bit, I want to talk a little bit about, our roadmap of working together and sort of the value add that we're going to bring to the users, respectively, of Lendingblock and Liquid. Why don't you take us through the roadmap over the next 2 to 3 months?
Sure. So we are at this point in time, here in sort of the start to middle of November, doing a sandbox testing exercise with about 35 institutional clients. So that includes firms here in Asia, in the US, in Europe, and basically what that's doing is enabling our institutional clients for the first time to get their hands on the platform, practice making and taking loans, make sure that they're operationally ready on their side for settlement processes, for margin calls,
Right.
etc. So test the platform out, but also test their own ability to be able to use it.
Sure.
At the end of this month, we will be doing a launch event in New York, and then we will be doing proper onboarding, basically from the end of November through December. In January, we'll launch the platform. So the original 30 odd institutional users, plus whoever else we onboard in December and January, will be live on the platform, transacting in January.
Fantastic.
So that for us is, will be a big milestone, given we started the company less than a year ago. But for us, it's really at the point of launch is really the start of a much larger expansion. So
Right.
we'll be starting with a fairly small concentration of assets and just doing fairly short-term loans. But throughout next year, we'll start to expand that out to cover a much broader range of assets and extend loans from 30-day maximum out to 180, bring on security tokens, bring on stable coins. So there's a big exciting roadmap ahead of us for next year.
Excellent. At least initially, is the plan to stick with cryptographic assets that are, tracked on a blockchain?
Absolutely. So we decided from day one to be purely digital. But by that, we include stable coins. So to be able to borrow fiat or collateralize with fiat gives you the same trade economic effect as being able to do it with dollars or
Right.
yen. But it means that you can do everything digitally, which means the platform and the operations are considerably simpler.
Right.
Yeah, I think an important one, and we'll talk about this, I think, shortly, is that we think a big part of the future of digital assets is not just going to be things which are non-securities, but actual securities once they start to be issued at scale on the blockchain as well.
Sure.
Yeah.
Asset-backed tokens.
Asset-backed tokens, yeah.
Gold.
Asset-backed sort of things which look like equities, things which look like debt instruments, all of those types of things which I think are going to move towards the blockchain as being a native way of issuance.
Sure. And for those who haven't tested it, I can just say that the Lendingblock platform looks like someone who's been involved in the lending business designed it, right? Not just a do-it-yourself home kidder, but someone who's really understood what institutions need. The order book is just fantastic, the way it's laid out between the bids and the offers, the way the margin is expressed. It's really quite a feat. So I've seen some preliminary screenshots. I'm really looking forward to myself to using the platform when it's ready out in December, January.
Yeah, look, so as well as a team where it's not just me with some financial services experience, we've got 200 years of financial services experience in the core team. We have extensively spoken about what we're trying to achieve with clients, so it's not something that we've pulled out of the hat.
Yeah.
There's a lot of experience and a lot of client feedback which has gone into helping us get to where we are. So it's good to hear that that has got the right result.
Yeah. Regulation. Got to talk about it.
Absolutely. We've taken the view from day one that regulation is a reality. It's got an important role to play, and I've used the kind of the analogy a couple of times that while there isn't regulation, it's inevitable that will be more and more. It's important that regulators get that balance right between sort of protecting participants but also not stifling innovation. It's really interesting for me as I've sort of traveled around hearing what the local views on regulation are. What's the lay of the land here in Japan with the JFSA?
So that's a great question. So there's been so much that's happened in Japan. There's so much history here. So let's just roll back the clock a little bit. 2014, Mt. Gox. And very ironic that Japan is actually the first, really major country in the world to develop at the national level a licensing regime and the designation of cryptocurrencies as the means for paying for goods and services. So really progressive. And then unfortunately, if we fast forward up until this year, 2018, we've seen sort of a slowdown, I would say, where you've had, and it was really instigated by, unfortunately, hacks at centralized exchanges, right? So our friends at Coincheck were hacked for $540 million, that's dollars, not yen, in January. And then that same event while we were in Singapore at Consensus, one of our other exchanges here in Japan, Xife, was hacked for $60 million. So these sort of things cause regulators to take a deep breath, slow down, and see where we're going. What I can say is about 2 weeks ago, there was a big announcement here that the regulators have decided to encourage the participants to create self-regulatory organizations. So again, you see the sort of similar structures that you would have had in a fiat or a stock exchange market, with FINRA. You see the equivalents being developed here in the crypto world. And I think it's a very healthy thing. And so with respect to Japan, there's a creation of the Japan Virtual Currency Exchange Association. And I'll give 1,000 cash to anyone that can say that quickly 10 times without stumbling over their tongue. And so that will sort of help the JFSA with this SRO to determine, okay, what tokens can be whitelisted in Japan? What services can be offered in Japan via, a cryptocurrency exchange? And so this is, to me, a very healthy development. It's a natural progression of things. And I'm hoping that once this SRO gets fully embedded, and we're hearing that could happen as soon as December of this year, you're going to start to see the pace of regulation and then, therefore, the pace of innovation actually increase coming into 2019.
Yeah.
What about in Europe? Because I know that's where the team is based.
So we've basically got three principles that we follow very clearly when we're thinking about and acting on when it comes to regulation. So first of those is to say that we want to get regulated where we can, and we chose to get regulated in Gibraltar because the government there created a framework which is based on principles. So rather than trying to fit a square peg into a round hole somewhere else, they've put in a process which says, explain what your business is, what the risks are, how you manage and protect yourself and your participants, but without being prescriptive about what activities you can and can't do. So we've sort of been working with the regulator there since March. We're right at the end of that process. It's been a really thorough process, but it's allowed us to put in place a framework which we can take elsewhere. So principle number one was get regulated where we can. Principle number two is to say where we can't, let's at least start the process of working with regulators. So we've taken what we've done in Gibraltar and have had discussions with the FCA, with the SEC, with the CFTC, and we think we're at the start of regulatory processes which will get us into a position where we're conducting authorized activities in those key jurisdictions. Now, what those authorized activities are, we don't fit yet into existing things, but our view is that, take for example the SEC, it will change its view on certain assets and look at them as being more like securities. And we think what we're doing, what other people are doing, is going to come more explicitly under regulatory control in some of the key markets where it's perhaps not at the moment, or at least in a grey area. And then the third principle is, even when we're not regulated, let's just pretend that we are in all times. So apply the same sorts of things that we know that would be expected of us by regulators. It's essentially the same sort of thing as you're saying about the self-regulatory organizations, but to do that, make sure that we're following those principles ourselves. And the move towards a sort of an industry policing, self-definition and policing of standards, I think is a positive one.
Sure. Is lending specifically covered under the DLT in Gibraltar?
It's not, because the DLT doesn't specify these are activities. What it basically says is that any organization that's based in the electronic transfer of value, essentially using distributed ledger technology, can apply for a license, but you need to describe what it is that activity involves. So there are exchanges, there are funds where the I would say sort of the vanguard of the lending business, but it's attractive because it is not narrow in its definition.
Right.
It's all-encompassing in its scope,
right.
But it has very high standards around the things that you need to have in place to make sure that business is appropriately appropriately run.
Understood.
So, any views on sort of a more broader regulatory perspective across Asia, so looking at Singapore or Hong Kong, for example, because I know that you have sort of activities outside of Japan.
Look, it's happening, right? So the adoption of crypto is the unstoppable force, and regulators, quite rightly so, are starting to put together frameworks by which good-intentioned organizations can follow and eventually help to serve clients in a secure manner, where the money launderers and sort of the bad actors of the world are kept out on the outside looking in. So Singapore is an interesting case, and I believe actually as soon as I've heard rumors that even this month at the FinTech Festival, it's happening this week in Singapore. I don't know if you're heading down there.
No,
this
I'm
week.
not. I'm going to Hong Kong, but not to Singapore.
Okay. That they'll be announcing sort of a framework for maybe somewhat similar to DLT, but Singapore's probably going to be more prescriptive, whereas up to this point they've been operating as sort of a look, let it develop and just sort of give general guidance, but nothing really published. So I think you're going to see before the end of this year, the rumor I keep hearing from my colleagues in Singapore is that the MAS will come out with some regulations. Obviously, last week in Hong Kong, there was a big announcement about a licensing regime over there. And so these are all healthy developments that, I don't think it's going to happen like a revolution necessarily, but more of an evolution of these frameworks for people to, create financial institutions using distributed ledger as the underlying technology.
Yeah, and we saw recently the FCA has announced a consultation period at the start of next year. We're seeing sort of some of the same steps towards regulators moving, with caution, but moving very deliberately towards putting the appropriate degree of regulation around the asset class. So I think positive, and I feel comfortable that there are a good number of organizations trying to do the right thing when it comes to working with regulators rather than hiding from them. Yeah, absolutely. So speaking of regulation, there's a lot of talk of STOs, a new regulated form of issuance of digital assets. How do you see this?
Oh gosh, so listen. Look, obviously I'm very bullish, and it's a really exciting time, right? It's a next progression of tokenization of the world, right? On the other hand, let's all take a deep breath and just realize that what we're talking about here. So, I saw a PowerPoint yesterday shown by one of my colleagues that STOs are ICOs plus regulation. And so I see a lot of people getting involved in the space, and it looks almost like ICO redux. So you have a lot of people don't know what they're talking about. You're seeing a lot of hype. You see a lot of over-promising and under-delivering. All the stuff I thought we had left behind in the ICO world, I'm starting to see in the STO world. That said, there is some great potential here. Look, I took a class a long time ago when I was studying for my CFA, and they made the point where you take two assets, and all things being equal, I won't use a Latin phrase, But one is traded in a public market, and one is traded in a private market. And the one that has liquidity in a public market will trade at a 30% higher valuation than the one that's illiquid. So you take this building here by itself is not all that liquid, right? But if you're to tokenize this building and send it out into 1,000 different pieces where people can hold it, maybe even in their wallet, in theory, you're unlocking some value from that building, right? And so that's the promise of STOs that's really interesting. However, if, for instance, I see some people saying, I was at a conference even last weekend, and the gentleman said, well, no one's doing ICOs now, everyone's doing STOs. And let's everyone, again, take a deep breath. If you don't have a viable business, if you don't have customers, you don't have a balance sheet, if you don't have revenues, you're not all of a sudden going to just overnight do an STO just because the ICO market is dead. It's not that simple. And it's also important for people to understand that ICO is a utility token is a fundamentally different asset than a security token. And so with that sort of clear-eyed vision, it's important to look at these markets as they are. In some ways, really utility tokens have an interesting upside that a security token never would. So if I were to take a bond, a zero coupon bond, for instance, that were offered by a municipality, the upside of that bond, even if you're to tokenize it, is very little. And in fact, if that bond went up more than a few percentage points over the period of holding it, something's gone drastically wrong, right? So that's a security token. A utility token, in theory, has all kinds of potential and interesting possibilities that as you disrupt the business system and as people join that ecosystem and as demand for that utility token is created, in theory, utility tokens have all kinds of potential. So my point is that STOs are a great opportunity. I just hope that they don't get this influx of bad actors and bad practices like what we saw in the utility token world.
Yeah, it's interesting. I think the distinction between a utility token, and I'll plug our token here as an example. So the LND token, it's created with one explicit purpose, which is for the payment and receipt of interest for loans on our platform. Right? So it has no other purpose, no other value. But the demand and supply for that reflects the vitality of that lending market.
Right.
So the more there is supply, the more there is demand to borrow, the more there is sort of demand for the use of the token. If you look at a sort of a conventional security, a debt security or an equity security, or in the case that you're talking about, kind of an asset-backed fractional ownership, the levels of kind of performance from that are going to be not much different than if that same asset, that same security was issued and traded on a more conventional stock market.
Exactly.
But I think what is interesting is that this becomes an alternative for somebody who might have issued a bond or might have gone down a route of sort of needing to do an IPO, to be able to access that sort of funding in a slightly easier way, and certainly for those assets to be transacted throughout their life cycle in a much more efficient way.
True.
So I think the STO growth for me is going to be kind of a slow boom. It's not going to be a kind of a rehashing of sort of the 2017 crypto bubble. It is just something which is going to take longer. But it will become, in my view, the potentially de facto way in which securities are going to be issued, because the transactional sort of underpinnings of using the blockchain is just makes things a whole lot
powerful.
Easier. And it's one of the reasons that we've taken our regulatory approach to say, let's get ourselves regulated for securities, because we know that securities are coming to the blockchain. It might not even be at scale in 2019, it might be 2020, but we think it's an important part of where the growth of the crypto asset class is going to come from.
Absolutely. No, I could not agree more. And I still, people ask me, well, are ICOs dead? I actually don't believe ICOs are dead. I think that, let's take the Lend token as an example. So as you develop your ecosystem and you create more users on the platform, more borrowers and lenders, and you then put sort of this upward pressure or downward pressure on supply, I forget which direction, but you create pressure on the supply where people need to consume it and hold it and use it, you will have potentially all kinds of interesting movements with the value of the token increasing over time. And so that promise is still there for the projects that are delivering on their rollout plans, that are delivering on their white papers, that are going to mainnet, that are increasing the amount of participants in the ecosystem. And so I still think actually that ICOs and STOs, I think both are going to develop over time, because what the commonality here is that we're leveraging the power of the blockchain, of immutability and decentralization, and that can apply to all kinds of different types of cryptographic assets, be them securities or utility.
Yeah, I mean, it's last year we definitely saw things get out of control in my view.
Right.
I think we've had awakening this year where people are actually a lot more diligent about where they put their money, and they're not necessarily looking for overnight returns. They're thinking, who are the team behind a project? Is there a real business case? Is there a real market for what they're doing?
Right.
And I think that that's been a healthy development.
Sure. So let's talk about custody. So that's something that we spend a lot of time here at Liquid and Quoine thinking about, and I'm really excited that we're actually engaging in our first real custody type of activity coming up in the next week or two. So how do you see the importance of custody services for institutions, or maybe even private families and high net worth individuals? How do you think custody is important in terms of the development of overall of blockchain-based financial assets?
Yeah, well, three things. One is that I think in some ways it's quite ironic and amusing that we've moved to a world of completely digital assets, yet we're having to do the equivalent of storing them under our mattresses to keep them safe. Right? So we are basically saying that this is completely electronic, but I can't trust an electronic version of it, therefore I need to put it in a place either in my nano, in my pocket, so nobody can access it, or lock it away in a nuclear bunker somewhere. So sort of leaving aside that kind of slightly ironic reality, for us I would say that having security around the assets is absolutely imperative, and it's imperative not just to us to protect our clients, but as many of our clients are again looking after somebody else's money, it's important to them. So that ability to be able to say that there is absolute security around the assets is to me, it's a hygiene factor going forward. If you can't have sort of custody of those assets, and that essentially means cold storage, then your chances of being able to get money at large scale, I think, are very slim. So we looked at maybe 12 to 14 different custodians.
Okay.
And we were looking at a sort of variety of factors, including sort of coverage of all the assets that we needed, the ability to be able to get things in and out quickly, so a sort of SLA on sort of extraction. Importantly for us, we wanted to do complete segregation, so no pooling of assets into one large account. So we take loans. We take loans, basically hot storage through to cold storage, and if you're the borrower or the lender, you can see that all the way through, so it doesn't get pooled.
Gotcha.
We think that's really important. I think the development that I'm excited about is what I would call sort of custody plus or custody 2.0. So we're working with a couple of custodians where we're going to be able to offer yield on assets which are in custody. So you not only just store it, but that that asset can get lent in a secure way, generate income which can more than offset the costs of custody.
Absolutely. Yeah. That's really exciting.
Yeah.
So I have a question.
Sure.
I was at a conference 2 weeks ago, and a gentleman stated, listen, if you don't have the private key to a wallet address on the blockchain, you have nothing. Where do you stand on this?
Well, I think what you're protecting is the private key. So to me, the asset is the key. So the key literally unlocks the door to the asset. So I think, if I talk about something I've got stored in an address, what I really need to protect is that key.
Right. Yeah. I think his point was, though, that if you, for instance, you have an account at Lendingblock or an account at Liquid for that matter, and your screen says, well, you've got 25 Bitcoin and 350 Ethereum.
Yeah.
But if you personally do not have the private key to those wallets,
Right.
you don't have anything at all. So it's sort of the blockchain maximalist.
Okay, yeah. So this is why I think, whether it's regulation or whether it's self-governance, if somebody else has got that key, then you need to be able to trust them.
Right.
So you need to know, that those people are doing what they say and are accountable to somebody.
Right.
If they're not, and I think one of the the benefits of that regulatory approach is that actually the organisation and the officers and the executives can be held accountable.
Sure.
So I think that to me acts as a proxy for having the key.
And so, and I'm with you on that. And I think there's another point that regulated financial institutions have to demonstrate on a daily basis, like we do, that actually our client assets are accounted for in a disaggregated wallet, and that there's a trusted third party that if, for whatever reason, our management team wasn't available, that trusted party would have the key to those assets, so that clients are not necessarily, even if they're entrusting their assets at an exchange like Liquid, it's not that they're just forever gone and they'll never be able to access it. It's just not the case. So how do you see institutional adoption in crypto progressing, and what role do you think Lendingblock will help us to get that?
Well, look, so we I mentioned we have about 30 clients at the moment that we're working
and all
with.
institutions, and these are
all
big
institutional,
names.
they're
We
big.
can't share them here though, right, Steve?
Well, we can share
We'd be
some.
violating all MNDAs or nothing, or what?
Correct, and I'd have lawyers on top of me,
right.
so
we
I
don't
do
want that.
But they're names that people recognise.
Sure.
So I think what's happening though is that at the moment we're dealing with what I would call kind of pure play native crypto institutions. So they are exchanges,
Sure.
they are funds, they are market
OTC
makers.
brokers.
Correct. They
Funds.
have equivalents in the real world,
Right.
but they are purely in the digital asset
Right.
space. What we're seeing though, I think, is that the funds, the exchanges, the brokers, the prime brokers who are in the institutional world
Right.
are putting their toes in the water or are making
Sure.
preparations. So
Sure.
you've seen the big investment banks talking about it.
Sure.
That activity to me is happening. One of the things that is holding them back, we've spoken about regulation, but sort of the maturity of things that they take for granted, custodial solutions, sort of exchanges that are trustworthy, and,
Right.
that work, lending solutions, derivative products,
Right.
all of those things are the foundation stones
Right.
that those clients really need to come in. So I think that process is happening. 2019 and the first half of 2019, I expect we'll see some of those big names be much more active, much more public, and I think that's going to be an exciting inflow of capital into the asset class.
All right. Let's make it happen, Stephen.
Let's do it.
Thanks so much for coming.
Hey, it's a pleasure.
Great
Thanks
talk.
for having me.
Great talk.
Thanks.
Thank you.